Normally, we talk about dividend ETFs on this channel, but today's video is a little different. Many of you are at an age where you might already have children, or even grandchildren. I'm at the upper end of that range myself, and I have 2 kids. Every now and then, I get asked whether it makes sense to invest for your children, and how to go about it. I'm not a financial advisor, so in these situations, I simply explain how I personally do it and why. In this video, we'll look at why investing for children is one of the most important financial choices you can make. I'll also show you exactly how I invest and explain why I do it this way. The strategy is extremely simple and perfect for building long-term wealth. A quick spoiler: dividends are involved, but they're not the focus this time. If that sounds interesting, stick around. And, as always, this is not financial advice, just my own opinions and experiences. So, should you invest for your children? Absolutely. I'd even argue it's not optional. By now, it should be clear to everyone that in 30 or 40 years, there won't be any pension anymore. In many European countries, the pension system is heading straight for a collapse. The main reason is the demographic shift that is already happening today. Another reason is political failure, as we can clearly see in countries like Germany. Instead of a real pension, the state will only cover the bare minimum, so anyone who doesn't prepare will end up poor. And honestly, in many countries, the situation is already not much better right now. The second reason to invest is the goal of becoming financially independent. Who says we all have to work until official retirement age? Anyone who plans smartly and starts early can step out of the rat race much sooner. We all know it, we've heard it 1,000 times. The earlier you start investing, the stronger compound interest works in your favor. This table shows how massive the disadvantage is for those who only start investing as adults. Another important reason to invest for your children, or better, together with your children, is to teach them financial education. The earlier they learn that money can and must work for them, the better their future will be. I really wish I had known all of this 20 or 30 years ago. The same things I'm teaching my kids now. So, how do I actually invest for my kids? Each child has their own brokerage account registered in their name, and the strategy is intentionally simple. 1 ETF per child, funded every single month. Now, you might expect something exotic here, but no. The ETF they own is the Vanguard FTSE All World. But here's the part that surprises many people. I picked the distributing version. In a moment, I'll show you exactly why I chose this ETF, why the distributing variant matters, and how I get my kids excited to invest their own money too. So, why do I choose to invest in the Vanguard FTSE All World ETF specifically? When you are investing for the very long term, you want a robust fund you can hold for decades without a single worry. And for that exact purpose, this ETF is perfect. By owning this fund, you are essentially holding the entire global economy in your hands. When the world economy grows, you profit from that growth directly. The provider, Vanguard, is an industry legend that has been a market leader for a long time. If ETFs still exist in 30 or 40 years, you can bet this one will be among them. This single fund holds thousands of large and mid-sized companies from all over the world. My kids already understand that as ETF investors, they are part owners of the businesses inside the fund. Of course, it's just a tiny fraction, but the principle still stands. When they look at the top 10 holdings, they recognize the brands they use every single day. They realize that these global giants are actually working for them. Since this is an all-world ETF, every relevant country is represented. We can be sure that in 10 or 20 years, completely different companies will be at the top. But that is totally normal, and as a holder of this ETF, you don't have to care at all. Everything is managed automatically, so you never have to guess which country will dominate the market next. In other words, this is the ultimate hands-off investment. It invests in almost everything, it is future-proof, and it lets you sleep soundly while your wealth grows. There are two versions of this ETF. The accumulating one, which reinvests dividends automatically, and the distributing one, which pays them straight into your account. Many people prefer the accumulating version, and that's perfectly fine. Everyone should invest in a way that fits their goals. However, I chose the distributing version, and I want to share a few reasons why this makes a lot of sense, especially for a child's portfolio. In fact, three main reasons come to mind. The first one is obvious. Dividends are a great way for kids to boost their pocket money. 4 times a year, extra cash lands directly in their accounts. This helps them understand that the money comes from the very companies they own a piece of. They learn firsthand that cash flow is real and that passive income actually exists. But that's not all. The kids also start to notice that these dividends are constantly growing. Every single year, there is more money hitting the account. There are 2 simple reasons for this growing cash flow. First, the ETF is being funded regularly through a savings plan, so the total investment is always increasing. And second, this ETF has a dividend growth rate of nearly 7%, which is honestly impressive. And as I've shown in a previous video, the standard All World ETF actually delivers more in total dividends over the long run than its high dividend sibling. The second reason I chose the distributing version of this ETF is all about motivation and engagement. Let me explain. An accumulating ETF grows silently in the background, and while that is effective, it's also a bit abstract and, let's be honest, boring. For kids, it's not very exciting to check on an investment that they won't actually see for decades. It's hard to stay motivated when the reward feels like it's in the far distant future. With a distributing ETF, everything changes. The investment becomes tangible because they receive real cash flow that is constantly growing. It is a regular reminder that their money is actually working for them. Because of this, my kids are actually motivated to invest some of their own money, but I'll talk more about that in the next chapter. Building a passive income stream is also a fantastic way to teach financial literacy. I can easily imagine that over time, they'll get a taste for it and decide to add specific dividend ETFs on top of their core investment. And honestly, I'm perfectly fine with that. After all, we're all looking for that extra cash flow to bring us closer to financial independence. Now we get to the third reason why I chose the distributing version of this ETF. Taxes. In Germany, everyone has a tax-free allowance for capital gains of 1,000 euros per year. This also means you can receive up to 1,000 euros in dividends every year without paying a single cent in taxes. This allowance also applies to children, as long as they have their own brokerage account. Yes, 1,000 euros is ridiculously low, but it's definitely better than nothing. Since this ETF pays a dividend yield of less than 2%, it will take many years before you even hit that limit. Now, let's talk about how to actually motivate kids to invest their own money too. As I mentioned, I already invest a set amount for each child every month. Let's just say 100 euros. But then, I make the kids a special offer. If you invest your own money, say 30 euros, I will match that exact amount. This means instead of 100 euros, we would have the original amount plus their 30, and my extra 30 going into the ETF every month. And that is exactly what they do. They invest a portion of their pocket money, and I double it. This is so powerful because they are learning right now to invest a part of their income immediately. That is a vital life lesson that I personally learned way too late. Sometimes, when the kids have saved up some extra cash, they make an unscheduled investment, and I double that too. Occasionally, they also want to buy Nvidia stocks, Bitcoin, or things like that. And that's fine. I want them to gain experience and learn, but I don't add any extra money for those kinds of investments. But enough about my family's strategy. I want to hear from you. Do you invest for your children or grandchildren? Feel free to share your thoughts in the comments. That's it for today. Don't forget to like and subscribe. Thanks for watching, and I'll see you next time.